and welcome to Gabe Trades. Ladies and gentlemen, traders and keyboard cowboys, I need you to strap in. Today we're talking about that one holy line on your chart that's more loyal than your dog, more honest than your ex, and more helpful than your therapist during a market crash. Now, VWAP, volume weighted average price. All right, guys, really quickly, I'm using TradingView. If you're trading without TradingView, you're trading at a disadvantage. Now, I'm going to go over to indicators, and then I'm simply going to type in VWAP. And this is going to bring me to my technicals. I want the first one here, volume weighted average price. We click that. Now what we're going to get here, standard settings, we have the VWAP line in blue, and then we have the upper and lower range. This happens to be like support and resistance levels, but we're not going to concern ourselves with this just yet. We go on over to settings, and in settings, we want to disable the band fill, the lower band and the upper band. And now we have this nice clean line, also known as VWAP. Now, I know some of you are thinking, oh, great, another moving average, another line on the chart, another indicator. No, this ain't grandma's 50 EMA plus grandma, initial coffee. This is the median of monetary mayhem. This is where the big money buys, sells, and judges use silently. Dumb money. Now, VWAP takes the average price of a stock based on where the actual trades happened and how much volume showed up. You know, volume, aka it's commitment. That's what volume is, right? It's a commitment at a price. Oh, like those Tinder matches that ghosted you after 2 messages. VWAP only listens to price that actually mattered. All right, so we had talked about VWAP not being like your grandma's 50 EMA. Well, a lot of traders like to use the 200 EMA, moving average, SMA. Now, what we're going to do is we're going to plot the 200 here. And what we could see here is if we were bullish or looking for a bullish bias, waiting for the 200 EMA, well, we would enter fairly late. Now, guys, this is just an example. No one expects you to trade after hours of pre-market, right? However, if we used VWAP as a bias and as our pivot, if you will, breaking VWAP here, as you can see, gets us in the trade much sooner and allows us to be profitable, of which we could then use the 200 EMA as additional bias. Okay. Now we can see here, market open, we break VWAP here. Finally, the 200, we use that as a bias, and look at, here we go. Nice bullish run. So essentially, VWAP will let you know when institutions and or investors are bullish or bearish, right? And it does so in such a way that articulates the move much sooner than the 200. However, the 200 is an incredible tool alongside VWAP to give you that additional bias, right? So that's VWAP in a nutshell here. So it's not your grandma's 50 EMA. Now, here's the good stuff. VWAP has 3 deadly features that'll turn your trading from gambling to godlike. Okay, so let's talk about these features. Number 1, same across all time frames. The same one of those jittery indicators that shifts when you zoom in. No, sir, VWAP doesn't give a damn if you're on the 1 minute, the 5 minute, or NASA telescope chart. It stays the same. It's the same line, like a cosmic truth that cuts across dimensions, because it's tied to the day's volume. 1 day, 1 VWAP, period. 1 minute, 2 minute, 3 minute, 5 minute, 15, 4 hour, daily, 1 hour, weekly, month, whatever. So the beauty of VWAP is it will always show you the same bit of information, no matter what time frame you're on. Okay. Unlike the 200, if we are on the 5 minute, you're getting the average price of the 5 minute candle over 200 periods. If we go to the 15 minute chart, we will get the average price of 215 minute candles. And then if we go to the 30 minute, we're going to get the average price of 230 minute candles. But what happens when we go to the 4 hour? We see, whoa, wait a second. Now we're above the 200 EMA. So we should be bullish, right? Wrong. We should be bearish, okay? And the beauty about VWAP is it's going to show you the same bias, right? The market sentiment, no matter what time frame you're on. We see here we're bearish on the 15, we're bearish on the 30, we're bearish on the 1 hour. The VWAP, you're getting the truth all the time. You should be going short here, not long. When price shoots way up above VWAP, that's not bullish confidence. That is FOMO fueled insanity. That's traders snorting opium and clicking buy like it's a video game. VWAP doesn't chase. VWAP is the mean, the reality check, the invisible gravity of the market. So when price goes full Icarus and flies too far, expect a reversion, because like every overconfident politician or celebrity crypto influencer, it comes back down like that huck to a girl. So let's talk about this really quickly, because a lot of traders experience FOMO without understanding that price likes to come back to VWAP, as VWAP is a magnet. Now, I'm going to turn on one of my indicators, which we call the STB band, over at trade1348.com. Guys, trade1348.com, shameless plug. Go ahead, check it out, free for 2 weeks. Now, what I'm going to do is turn this on, and you can see where we get the pivot point here, where it's green. And then we could see where price action fails. We call this the STB line. It goes yellow, lets you know, caution. And of course, we go back to VWAP here. Now, price action has no obligation to come all the way down to VWAP, but as a trader, we have the sense that if we are above VWAP here, guys, if we are above VWAP, we're bullish only, so we do not take the trade down, okay? It's only when we break VWAP here where we take the trade down. Consolidation every VWAP equals dealer's choice, becomes a binary moment on the chart. Now, here's where it gets delicious. When price parks on VWAP and takes a nap, that's not indecision, it's a trap. It's the market whispering, come closer, come trade, come lose money. Life's gonna leave. The first one's gonna hate you. And you know what? You're gonna get the scarlet letter emblazoned on your forehead, the letter L. Loser. You've got bulls and bears in a Mexican standoff with itchy trigger fingers. That's really what's happening when you consolidate at VWAP, right? It's the middle line in the sand, and whoever wins that battle near VWAP, they set the tone for the rest of the damn day. It's very, very, very common. Institutions use VWAP as a benchmark. They don't care about your MACD cross or that Fibonacci tattoo regret. Who gets a Fibonacci tramp stamp? They want fills close to VWAP to stay stealthy, right? Institutional trade desks, they want to make sure that they're getting good prices, right? Where are those good prices? They're around VWAP. You don't want to go ahead and buy Tesla when it's too far extended above VWAP, and you don't want to sell or go short on Tesla when it's too far extended below VWAP. Now, guys, I want to take VWAP to another level here. Of course, we could see, right? We're going to drive the point home. This is my personal VWAP that is color-coded with relative to price here. So if we break above VWAP, we're bullish. So therefore, our VWAP is green. Below VWAP, we're bearish. So it's red here. You can see here, previous trading day, right? Below VWAP, we were bearish. Now, what I'm going to do is turn on the band here, right? Because there is such thing as overextension, and we need to identify where that overextension happens when we're bullish. So I'm going to go into my settings here. I'm going to turn on my ribbon once again and my S2B line. Okay, cool. So what we could see here is, let's say we entered the trade on Confluence, our green band here, our green VWAP, and then we ride it all the way to the cautionary yellow line here. That's a profitable trade. Of course, we could see that there's consolidation here, and our band thins out. But of course, you could see price action simply bouncing off of VWAP. But then we get the continuation with a nice, healthy move. The band, we get caution here. We could exit, and then we can re-enter. And then, of course, we exit here on caution before it goes red and trades into VWAP. Now, for someone who's looking to scalp and take that opportunity down, you have to break a VWAP with confluence on the band. But we take it a step further here, right? Because we have something that's called Trend Tracker. Now, with Trend Tracker, it lets you know the best entry, the ideal entry here, okay? And it gives you zones of caution, as you can see here with the gray markers here. So here we get confluence here. Where's our best entry? Our first green candle. And we rock on and we make money. Now, so you guys can see here, it goes red and it's gray here. It's saying, no, probably don't do it. And then we have the yellow X markers here, which is letting you know, like, hey, bro, it's consolidation. Probably don't want to do anything. And then boom, here, hey, here goes your quick scalp. And then, of course, you see it makes an attempt to come into VWAP and then chop, right? So what you're going to find, guys, is when they're trading VWAP, you want to trade away from it. And when you trade into it, expect it to chop until institutions decide, hey, what's the real sentiment here? Are we bearish or are we bullish, right? See here, we could see clearly we broke below VWAP, and of course we have confluence with our band and trend tracker here, and we're bearish. We're not bullish. VWAP acts as resistance. We're bearish again. We're not bullish. Again, failure. We're bearish. We're not bullish. Okay, failure, right? And what you can see here, it's all color coded, right? Red band, red VWAP, and then we have red trend tracker. Okay. This system here at Trade 1348 is color coded for that reason, to simplify your trading bias. All right, guys, check it out at trade1348.com. Being right there around the point of origin, that line of demarcation is very, very important for when we initiate those orders or when we're looking to fill outstanding orders. Now, VWAP bounces are some of the cleanest setups in trading for that reason, okay? When price pulls back to VWAP, then launches like a SpaceX rocket, that's confluence buffet right there. And of course, we use a trend tracker to show you where that confluence is, right? Now, VWAP breaks plus retest, that's your knight in shining armor. Or it could be the Grim Reaper in disguise. Depends which side of the line you're on. So that's why we use multiple confluences. That's why we use tools like we find at Trade 1348, which show you, the how price action will behave around VWAP. So let me say it loud for the degens in the back. If you're selling below VWAP because it felt right, you're gambling with emotional coupons. And if you're ignoring VWAP completely, buddy, you're not trading. You're just financially LARPing. So my final thought, VWAP is the truth serum. It's the average the market actually respects, and it's one of the few indicators that won't gaslight you on a red day. So use it, respect it, ride it like the statistical stallion it is. Because in this game, there's price, there's volume, then there's VWAP. Everything else is just noise.